It's about that time of day again. My name is Joseph. Tuesday evening, November 20th. Welcome back to your nightly newsletter. My job is to help new traders just like you earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the best locations to look for my favorite entry patterns tomorrow morning in my trade room. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bearish with a $4 move lower. And that tells me to anticipate a range-bound market tomorrow morning. And the plan is to use buyer failures to sell up above that moving average tomorrow morning. The S&P is bearish and trading at the low of a range this evening, and that tells me to look for selling opportunities up at the highs of that range. But in the short term, I'm looking for sellers to fail for a possible scalp going back up to retest those highs. The Nasdaq is also bearish with a big wide triangle on the chart tonight, and that tells me to fade those breakouts using those two failure patterns tomorrow morning. Gold is bullish with a trading range this evening, and I'm waiting patiently to look for buying opportunities after the sellers complete a key pendulum swing off the highs. And of course, last but not least tonight, we'll wrap up on the euro. The euro is bearish with a strong run lower. So my plan for tomorrow is to find selling opportunities at the high of this channel before we get to a key support trend line only a few points below us. And of course, we're headed into the Thanksgiving holiday on Thursday this week. And with a ton of major news on the schedule tomorrow morning, I'm expecting tomorrow to be a little bit chaotic, probably like the airports will be tomorrow as well. But that's not going to stop us from finding some great opportunities for tomorrow's trading session. Before we jump into those charts tonight, though, and put the plan together, I need to remind you, if you're watching me tonight on YouTube, you can read all the details of today's trading plan by reading the full text, which is located right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of the YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you do, hit that bell icon so you always get notified every time I post another video. And if your goal is to become a consistently profitable trader, make sure you join our mailing list right here on the homepage of our blog at Sideways Markets. Don't forget, you can download all the charts from tonight's video. There's a big button right below the video tonight, and that will allow you to download all the charts and have them ready for your session tomorrow. And if you have any questions, you can always call that toll-free number in the upper right-hand corner. I look forward to answering the call, answering all your questions, and helping you find success in whatever market, right, you want to trade. All right, let's jump right in. We have a lot to cover here for tomorrow. Starting off with the schedule here. What do we have here on the schedule for tomorrow? Tomorrow's Wednesday, November the 21st. As I mentioned earlier in this week, right, Thursday, of course, is the holiday, right? Markets are closed on Thursday. Friday is Black Friday. It's a half day on Friday, and I would imagine tomorrow is probably going to be pretty much a half day as well, tomorrow being one of the busiest travel days of the year tomorrow. So I would imagine tomorrow morning going to be a relatively short-lived session, just like Friday morning as well, closed on Thursday. Plan on an early in, early out scenario tomorrow on Wednesday and again on Friday. If I had to choose which of these days are probably going to be the easiest, I would say it's probably going to be Friday morning. My guess would be Friday, you'll probably get a relatively decent move. It's probably not going to last very long. It'll be a relatively short session. But I would say probably the easiest trading will probably be on Friday. I'm anticipating tomorrow just because we have quite a bit of news tomorrow. We've got those durable goods and jobless claims at 8:30. We've got sentiment and home sales at 10 o'clock. And then, of course, we got the petroleum status report at 10:30. And when I think about tomorrow's session, I think a lot of people are going to be rushed tomorrow either getting out of their offices, getting to the airport. I would imagine tomorrow's markets will feel a little bit chaotic. It'll probably mirror the personality of the people who are trying to trade them tomorrow. Now, hopefully I'm wrong. Hopefully I'm wrong on this. Hopefully it's a very easy session tomorrow, but I am anticipating it to be a little bit rough around the edges, especially with the fact that we've seen such big moves on the equity markets and the oil markets. I wouldn't be surprised tomorrow if we do a lot of trading inside of ranges tomorrow morning. You know, big moves down on oil, big moves down on the E-minis. Again, I would expect there to be a little bit of congestion tomorrow. I would expect the markets to feel a lot like the airport, right? Lots of people trying to get where they're trying to go and not a lot of open space, right, and patience to do it. So lots of news tomorrow, 8:30, 10 o'clock, 10:30. So make sure you're aware of those major news events. Again, early in, early out tomorrow if you're going to be trading, and don't forget to keep it right, keep it simple. Tomorrow's not the day to be trying to expand your trading strategy. Keep it as simple, keep it to your best patterns tomorrow. And of course, don't forget Thursday, of course, markets are closed in the US. I'm sure you will have European markets, Asian markets will be open. Be very, very careful anytime we have a major holiday in the US that will bleed over into the other markets. Then again, on Friday morning, Friday's a half day, so it's actually listed as a half day on Friday. So that definitely means if you do plan on trading on Friday morning, oftentimes that Black Friday session is pretty darn good. We oftentimes get that little window between 8 o'clock and 10 o'clock that you can catch a nice big measured move, a nice channel rotation. Don't expect too much, but it's usually a pretty calm and kind of chilled out market that Friday after the Thanksgiving holiday. So if you do plan on trading on Friday morning, just make sure you limit the amount of turkey and stuffing you eat on Thursday. That way you're not so groggy, right, trying to trade on Friday morning. But all kidding aside, obviously, be careful on Friday. Get to it early. Get out of there early. And, of course, enjoy the holiday. I think that's something I always try to remind you guys is that the markets are open so much, right? They almost never close. This is one of the few times each year that we stop the hustle and we stop the trying to further our careers and making money. This is the time to slow it down a little bit. Spend some time with grandma and grandpa. Listen to some of those old stories they tell around the dinner table. If you got kids, right, make sure you soak that up as best you can. The kids are not going to be young forever. They're not going to be cute and adorable forever. So make sure you do spend a little bit of time, right, with the older people in your life, with the younger people in your life, because I'll tell you, this life just moves so fast. And we blink and it's gone. So definitely my little, heartfelt reminder, make sure you do spend some time giving Thanksgiving, right, this week. But again, you've got a good plan here ahead of you. Half day tomorrow, day off on Thursday, half day on Friday. And again, go easy tomorrow, right? Definitely go easy tomorrow. I would expect tomorrow to be a relatively choppy, sloppy session. And again, with a lot of these big moves, like this $4 move we saw on oil today, right? I would imagine with some of these big moves here, we're going to probably see quite a bit of range-bound markets as we go into tomorrow's session. All right, speaking of tomorrow's session, let's grab some charts now. I got my sappy little speech out of the way there. I'm not joking though. It is definitely important. I definitely need to take my own medicine on that one sometimes, right? Get away from the desk and really spend some time with family and friends when you have them all in the same room like we will over Thanksgiving. All right, starting off tonight, we got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bearish with a strong move lower, a spike in channel, and a measured move on the chart tonight. The strong move down gives the bears the momentum, and that tells me to look for selling opportunities up at resistance levels overhead. And of course, easy areas to look for a level of resistance would be the top of this channel, right, along with the prior swings overhead. So really this whole area up here between the top of that channel, right, and that high swing are really on my radar right now for selling up at right, for selling up at resistance. It's also important to remember that anytime we see such a strong move in one session, the following day is really almost always a range-bound market, right? So I'm going to keep my eyes open for double bottoms, double tops, a flat moving average, and that will tell us, right, that we're definitely starting to go into that, right, into that trading range. I mean, look at this thing. We basically went from 57.50, right, down to 53.50. So $4, right, $4 move and change, almost $5 down, right? A pretty substantial move, right? And that's hasn't been the first one. We've seen quite a few of these over the past, right, week or so. So I won't be surprised here tomorrow if we spend most of our time here going sideways here. So we'll definitely want to make sure that we plan accordingly. So I think the most important thing right now is going to be, what if price goes up? What if price goes down? What if price goes sideways? If price goes higher here, that's really exactly what we're looking for. And we're kind of looking for a similar pattern that we saw here, where we go up one try, two try, and then back down. So I've got my levels of resistance waiting overhead. I'm going to be looking for what we call a two-try failure pattern as we go higher. And that basically means I'm waiting for, much like we saw back here, I want to see us go up once. I want to see him try to buy that pullback off the moving average, right? That'll be twice, right? That'll be once, that'll be twice. Then we know where those stops are, and we can sell right into those stops, right, as we come crashing back down. So that's the two-try failure pattern. Then, rather than trying to chase after this move going lower, I'm going to look to sit tight, wait patiently for a pullback, and I'll look to sell off of that hidden channel pullback pattern. So as we go higher, and you can kind of see an example of how that worked before, right? We saw it go up, one try, two try, big move down, right? Then you would look for that, right? That sell back down. So one move up, pull back, two moves up. I'm looking to sell into that failure. That's the two-try failure pattern. Then we'll look for that hidden channel, right? And look for that sell off that hidden channel, right? That hidden channel. I can also see there might be a bit of a trend line that forms here. We'll see if this trend line sticks together here. But if it does, we could use this trend line now as resistance, right? So this could easily end up into a one try, two try, right? Into a 1-2 two-legged pullback setup, two try failure pattern, and then into that hidden channel pullbacks. This could really get good here for these, right, for these sellers. You could have, again, if we have this, if we can get it, if the trend line continues here, we can use that trend line now for a 1-2, right, kind of like an early entry on that, right, on that two try failure. Then we can also sell into those stops of the buyers. And then again, we can use that hidden channel pullback to sell off the top of that hidden channel, right? So a two-legged pullback into a two-try failure into a hidden channel pullback. It's quite a bit there, right? But those are the three patterns that we're looking for. If we go sideways, right, keep an eye out for a double bottom here. If we go sideways, in other words, if we see a double bottom, right, at this low, if we get a double bottom at that low, now we know we have a range. If we have a range, then we look for that two-try failure above the high of that range. One try, two try, and we'll look for that sell back down. Let the buyers try once, let the buyers try twice, and then once we see that 1-2 try, then we start looking for that sell going back down into that trading range. Now, another scenario I do want to prep for here is, what if it just keeps rolling lower, right? What do we do then? If it keeps just rolling lower, I'm going to keep this channel on here, and I'm going to keep looking for the same exact pattern here. We're not much will change here. We'll have to go up, one try, two try, failure, back down. I'm going to still look for that 1-2 try failure, and we'll still look for that sell. We just have to wait a little bit later in the process. So now we know if price goes up, price goes down, price goes sideways. How would we reverse? What would a reversal look like? It's a little bit unrealistic, first of all, to be very honest. It's going to take a lot for this market to fully reverse, but I always look for what we call the 1, 2, 3 reversal. And the 1, 2, 3 reversal is just like it sounds. It's 1 is a strong move higher, 2 is a pullback to the moving average, and 3 is a strong move off that moving average, right? It's not enough to just get a strong move higher, because a lot of times this will bounce and then collapse right back down in. So I don't want to make that mistake. I want to wait for that strong move up, wait for that pullback to the moving average, and then look for that blast off that moving average. I know it's not fun to let the market go without you, but when you're trying to go against the trend, it's better to, as I say, it's better to trade a little bit of profit for a whole lot more probability, right? It's a lot more probable to be a buyer once this market reverses. So what I'm going to do is I'm going to grab that high, create what I call my sweet spot here, which is that prior swing right there in between that low, and just wait for that pullback and look for that buy up from there. If we can get this thing to reverse here for us, right, we've got a great big move going all the way back up to that 57.5 area tomorrow, if we can get these buyers on the right side of this market. For now, we're trying to go up, let those buyers get in trouble and sell into those stop losses, right? And again, with tomorrow being a big travel day and a big news day, get to it early. Let's keep going. How about some S&P now? S&P is definitely bearish. Low of a trading range, pendulum swing on the chart this evening. The bears clearly have the momentum right now, right? Nice strong move down to get the day going, and then of course you'll notice they finished right at that low. And anytime we see a market that runs, bounces, and then sits at that low, we know that sets up for a trading range environment. So the bears definitely have the wind at their back, and that tells me to look for selling opportunities up at resistance levels. And of course, with this being a range, there will definitely be a couple levels of resistance that could be used for a sell, such as that 26.53 area. But let's be honest, right? With this range, it's going to be a whole lot more reliable to sell up around the high of that range. Now, while we're waiting for this thing to go back to these highs, in the short term, I'm looking for the completion of this pendulum swing, the amount of the move above the range. I'm looking to complete the amount of the move below the range. I'd like to get the completion of that pendulum swing and then look for what I call the nested two try. Will be a 1, a 2, right? Let those bears try once and twice, and then buy actually in the short term with the appropriate entry pattern. So there is potential to be a buyer in the short term, but again, we got to wait here for this momentum, right, to really get absorbed here. Let these bears finish off their job. So as I zoom in a little bit closer on it, we're definitely bearish. I want to sell up top here, and what I really want to do is get pretty much this exact same pattern that we saw earlier today, where we went up, pull back, try again, and then back down, right? That's that classic two-try failure pattern. And there's a couple different ways we can do it, right? We can go up, one try, and then a nested two-try back down, right? Or it's an up, it's a pullback and a full two-try and back down. There are quite a few, right, different variations of that two-try rule. In fact, if you'd like to learn more about the two-try rule, you'd like to learn more about all of our entry patterns, what I'll do is I'll drop a link up here in the upper right-hand corner into our free trading course. Grab that link. I'll also put a big button right below the video tonight if you're on our blog. Grab that free trading class, and you can learn all about the two-try rule, all the patterns we've talked about so far, and see real examples of how we use them every day in our trade room. So if you want to learn more about the entry patterns, make sure you grab that free trading class. So again, bottom line is, here we are, right? We're going to bear market at the low of that range. I want to sell one try, two try up off that high, much like we saw right earlier on here. You can see how it's a 1-2 back down. There's also, right, the nested 2-try, which means it's a move up. It's a 2-try inside of a 2-try, right? You can see how it's a large 1, 2, and then back down. And then just inside the second try, it's a 1, 2, and back down as well. So I'm looking for almost identical pattern up here. 1, pull back, 2, and then back down we go. In the meantime, though, as we try to get back up to retest that high, I'm going to hopefully get the completion of this pendulum swing. The amount of the move above is the amount of the move below. Remember, the amount of the move outside of that range oftentimes comes swinging back in the opposite direction. So, of course, I'm expecting it to try to finish off that move. What I look for then is if we do finish off that move, I'm then looking for that nested 2-try, which would be where we go up 1, 2, and then once we see those sellers, right, they're trying once, they're trying twice. Usually what will happen is you'll get that nice strong signal and we'll look for that buy, right, going higher here tomorrow. Now, as far as a trading range goes, don't forget, stay away from that middle. We're going to buy low with that 2-try off the low. We're going to sell high. Obviously, selling high would be preferred here. Stay away from that middle. Buy low, sell high. What would it take to break out of this range? Well, you'll notice here I've drawn this trading range, copy and pasted it down, copy and pasted up. That created resistance at 82, right? That creates support at 16. So this support level at 16, we have to get through that 26.16 before I can really take a breakout seriously. So in other words, if we break lower here, a lot of times what will happen is it'll break lower and just sit right at that range expansion level, and it will make you think like this market wants to break out. What I've been looking for again is a 1, 2, a nested 2-try rule going back up into that range. And again, if you want to learn more about that 2-try rule, check out that free trading class. You'll learn a whole lot more there. So most important thing is we've got to get through this 26.16, then we can start thinking about this market as being a bear breakout, right, and actually taking it seriously to be a seller. If we do get through that low, look for a spike in channel. If we do see it blow through that low, it'll probably be a spike in channel. If that's the case, we'll find that new channel and look for that sell off the top of that channel. Again, that'll probably be middle to late morning tomorrow. So just be careful, right, as this market tries to bleed lower. If it keeps going lower, just make sure we get below that 16 and we're off to the races for another big run down. In the meantime here, I'm looking in the short term for a strong move down, finish off that pendulum swing for a 1, 2 nested 2-try going higher, or as we go higher, 1-try, 2-try, looking to sell this market back off those highs. Stay away from the middle, buy those lows, sell those highs, right? And again, get to it early tomorrow morning. Let's keep going. From the S&P now to the Nasdaq, they are similar but very different. The Nasdaq is also bearish. The Nasdaq also has a range, but you'll notice it's more of a triangle this evening, which basically tells me the most reliable trading opportunities will be selling above the high of this range using that 2-try buyer failure pattern. And if price tries to push lower, I'm certainly open-minded to buying off the low, but I will want to use that nested 2-try failure pattern to make sure I allow the sellers to complete their momentum right before getting long off of those lows. So as you can see in the NASDAQ, a strong move down. That sets the tone. The buyers were never really able to take it back and make up any ground here. We pretty much finished the session right back down, right where the morning pretty much came to an end earlier this morning. So I've got a rising support trend line. I've got a falling resistance. I've got lower highs. I've got higher lows. I've got a flat moving average. It's a range. It's a range. This market is very much range bound and not a huge surprise. This thing's been beat up and battered the past 48 hours. And like I said, with a lot of movement earlier on this month, I would expect tomorrow possibly to be a real choppy range bound day here, which of course is fine by me because we have a great plan for a range bound day. So as we go, remember, don't right? Stay away from those middles. The middle of the range is always going to be the most difficult. I want to buy off of that low. I want to sell up around that high. Obviously, if I had to choose between a buy and a sell, I would choose the sell because of that overall bear momentum. But looking at it this way, though, just like on the S&P, if we do go lower, I will be looking for that nested two try, right? So we can grab that buy going back, right? Going back higher again. That will still be in play here for tomorrow. So as I zoom in on this, stay away from the middle, sell high. To sell high, I'm looking for that nice strong run up. I want to see those buyers now try to come in and buy that pullback. Once I see those buyers start to fail, I look for the proper signal to sell back into that trading range. We call that the 1-2 try failure pattern, right? 1, pull back, 2, and collapse back down in. Same pattern that we saw earlier, right? So 1-2 try failure, and we're selling into the stops, right, of those buyers. Once we do get that 2 try failure, I don't want to chase the market going lower. I want to find that new hidden channel pullback pattern, and we'll look to sell off the high of that channel. So it's a relatively easy set of patterns if we can get this market, right, pushing higher. And again, you can see hundreds of examples of these 2 try failures, these hidden channel pullbacks as part of that free trading course, which again is linked up right below the video on our blog. It's also in the upper right-hand corner, right, in that information icon in the upper right-hand corner. Now, if price goes lower, we have to be a little bit more careful here. If we do get this mark going lower here, I'm waiting for that 1. I'm waiting for that 2. I want to see those bears try, and yes, try again before I go looking for, right, that buy going back higher. Now, why is that different? Why can I go 1, 2, and down here, but I have to wait for 1 more at the lows? Well, it has to do with the fact that the overall momentum is bearish. So you don't want to take a seller failure in a bear market. I want to take a buyer failure in a bear market. In a bear market, to be a buyer, I'm going to want to wait for a little bit more evidence, right? So wait as it goes lower, and then it's 1 and it's 2, right? And we're looking for that rally going higher from there, right? So 1, 2, again, buying off of that low. Oftentimes, there's a trend line that comes in, right? And we can use that trend line as support as well to buy right back up, right, into that trading range. So range-bound market, stay away from that middle, buy that low, sell that high. And again, just a slight variation with that 2 try pattern between buying off the low, right, and selling off the high. And that will tell you which pattern, right, the overall momentum of the market, right? This bearish momentum tells me that to be a buyer, I need a little bit more proof, right? If I want to be a seller, you can literally go up and kind of fall off a horse and make money as a seller in a bear market, right? As a buyer in a bear market, it's a little bit more finesse, a little bit more patience, right? So that directional trend, that directional momentum, that will tell me specifically what the best variation of that pattern, right, will be here for tomorrow. Buying off that low, selling off that high. Now, one more thing. How do we break out of this range? What would a breakout look like? A breakout is very similar to a 1, 2, 3 reversal. For example, if we see a strong run higher, we then want to wait for that pullback. If we can hold that pullback and jump up from there, that is a 1, 2, 3 reversal that would also be classified as a successful breakout. And again, we saw an example of this before where it went up, pulled back, and just couldn't go, right? So that's what we need to see tomorrow morning if we're going to get that breakout, right? We got to see that strong move up. Then we can go out, find our new channel, and I could buy off the low, right? I can buy off the low of that new channel. And at that point now, if we can get this thing to reverse going higher here, again, I'm not trying to predict a reversal, but I will be open-minded to it. If we do get the reversal, keep your eyes on that 66.80 area, because that was that range that we finished up in yesterday's session. That'll be a big magnet for those buyers, right? So keep your eyes open. for those 1, 2, 3 breakouts. Obviously, we're not trying to predict them, but we definitely do want to have them on our radar if we do see them. Let's keep going. From the Nasdaq now over to the gold. How's gold doing here? Gold is bullish with a trading range, a resistance trend line, and a measured move on the chart this evening. The bulls definitely have the momentum going into this trading range, so my goal is to buy the lows of this range using that 2-try seller failure pattern. And with the momentum coming down off this pendulum swing, right, with that pendulum swing momentum coming off the highs, I'd like to see us wait for another leg lower, get us down inside that battle zone, and then try to use this trend line, right, as support for that 2-try. So that would really be ideal for me, right? Is to use that trend line as we go higher here, or use it as support to go back up into that range. So the most important thing right now is the bulls have the directional bias here on gold, right? There's definitely that directional bias is bullish. We go right into a trading range. This range was narrowed a little bit in today's session, but right into that trading range, I have a move above the range, which of course collapsed. Not a huge surprise there. And you can see a good example of a nested 1-2 failure there. A good example of a nested 2-try right there. But a good example here, though, of a pendulum swing up, pendulum swing down. And I'll tell you, usually these pendulum swings are pretty darn accurate at anticipating kind of where the best trade is going to be. So I'm really trying to stay patient tomorrow morning, just to get down around that 18.5 area. That would really be ideal here for us. I think the big variable right now is this trend line. I think this trend line is probably going to be the big variable here. What I'd love to do is see this thing head lower one more time, right? Make that the first try, then back above, second try, right? And then buying off that trend line. I mean, that would be ideal, right? That would be ideal. If we could get, again, keep that trend line on there. If we could get one more push down, then get that second try, right? Then we've got the 1-try and the 2-try, right? That will be great. That would allow us to now use that trend line, right, as what I call a 2-legged pullback pattern, using that resistance trend line as support, right, on the other side. Another thing you want to think of too would be if we were to go up into that range now, coming back down, right? That would also be an option there as well. In fact, you could even look for that combination of this not only being a 1-2, right, and then buying off that trend line, but at the same time, you could now build that into a nested 1-2, right? Let those bears try once, try twice, and buy into that one too, right? So there could easily be a series, right, of potential opportunities here as we pull back and finish off that pendulum swing. So I'm keeping my eyes on that 1218. That 1218, if we can use that trend line, right, that trend line will give us a shot to be a buyer. And then again, if we can get the appropriate nested 2-try, we can then look for that buy off the nested 2-try as well as we try to go back up into that range. The one thing I really don't want to do is try messing around with the middle of this range, right? We spent a lot of time on that, right, early this morning. So if we do end up in the middle of this range right now, you know me, right? Stay away from the range, middle, don't fiddle with your middle, right? Stay out of that middle. If we do end up chopping around the middle, just keep focused on the 1-try, the 2-try, and keep buying it right back up, right? Keep looking for these failure patterns, 1, 2, and then back up we go. And again, I'm just drawing these up right now. If you want to see literally hundreds of examples of these 2-try failure patterns and all the patterns that we've talked about tonight, make sure you grab that free course. It's linked up right below the video tonight on our blog. So hopefully, right, if we do go sideways here, hopefully we'll see a 1, a 2, right, nice 2-try failure. We can buy going back up into that range. And then what would a sell look like off the high? Could we sell off the high? We could. It'll be something similar to that, right? So it'll be a strong move up, It'll be a nested 2-try, 1, 2, and then back down in, much like we saw here earlier. Strong move up, 1, 2, and collapse back down in. That will be the pattern we're looking for, going back down below that range. And of course, last but not least, how do we reverse? How do we break out of this range here? It takes a lot of strength. Now, look at how much strength they had earlier, but they couldn't hold it and go, right? They couldn't hold it and go. So what do? Strong move up, pull back to the moving average, right? And then strong move through. And remember, whenever we have those trading ranges, we're going to mark up our range expansion. That's resistance. Range expansion, that's support. We've already talked about buying at support down here. The goal I want to tell you, though, is be very, very careful buying into those highs, because you can see from previous experience that 29.2 level is a major level of resistance. So I'm going to wait for price to push through that level, just like we talked about on the S&P. Then we can go out, we can mark that high, we can mark that, right, mark that prior swing, and we can look to buy off that pullback around those lows. That'll be the easiest way to get long after, keyword after, we break out above the high of that trading range. So it's a relatively easy plan for a breakout. Same thing applies to the downside too. 1, 2, 3, right? If we do see a strong enough move, a 1, 2, 3 off of that trend line, or off the moving average, then we can look for that new channel. And I have no problem being a seller. I just have to see that 1, 2, 3 reversal. We have to see that 1, 2, 3 breakout. We have to get that successful breakout. Again, below that 18.5 area. It's got to really push through. Then we can go out and find that new channel, right, and put the plan together from there. All right, looking good. Wrapping up here tonight on the euro. The euro is bearish with a strong move lower, a bear channel, and a support trend line waiting below us. The strong trend down tells me the bears have control. So my goal is to sell at resistance levels overhead, such as the high of this channel, high of that channel, and of course, right up at the prior swings that make up the battle zone. Now, my only concern is if we keep bleeding lower here. We have this trend line, right? This big trend line coming up off of these lows. This is not a joking, right? So it's not a joking trend line, right? This trend line is definitely here. There are 3 points to it. So that trend line is something we definitely need to be worried about, right? We definitely need to plan for, right, that trend line down below us. So ultimately, let's plan price goes up, price goes down, price goes sideways. If price goes higher here, hopefully we get a nice big pullback, right? Then we'll look for those buyers here now to try to buy, right? That will give us what we call the 1, 2 try. Once we have the 2 tries, then we know where the stops are, and we can sell right into those stops, right? That, of course, being the first opportunity there to sell right into those stops. Then I can grab my new hidden channel, and I can sell off that hidden channel high, right? So these are easy patterns if we can get that market going higher. I love the 2 try failures. Definitely one of my favorites. Hit a trade every day in our trade room. If we go sideways here, right? If we go sideways, again, right, expecting a little bit of chop and slop tomorrow because it's Wednesday before Thanksgiving. So if we do see it go sideways, if the moving average flattens out, if we see double bottoms in the chart, now we know we're range bound. Not much will change, but we're still looking for that 1 try, that 2 try, so we can sell it right back down in. 1 and 2, and then sell it back down in. That will make for a nice easy, right? That'll make for a nice easy sell back down. The only challenge I think we're going to have is if this thing keeps going lower. If we keep grinding lower, we're going to find ourselves in a position where we are running out of space. And anytime we start running out of space, we shift our focus to traps. Trap patterns are one of my favorite tools to use when we have a trend, but we're starting to approach a key level of, like in this example, a key level of support. So knowing that we have that key level of support there, if we start digging into that support level here, I'm no longer looking to sell pullbacks, I'm looking to sell with traps. The other option will be if we can get through this trend line, right? Well then, if we can get through this trend line, what I like to do is make sure I get the moving average below it, and then we can use that trend line as resistance, right, on the opposite side. So the key is, if we're going to go below that, right, below that trend line, I want to make sure I get that moving average to clear below it as well, and then use it as resistance. And again, we'll walk through all of these patterns, right, real examples of these patterns in that free trading course, which again I have linked up in the upper right hand corner in that information icon up top, or it's linked up in the bottom right below the video here tonight on the blog. All right, guys, so really quite simple here. I want to go 1, 2 back down, or if we go sideways, right, it's 1, it's 2 back down, or if we go lower, right, it's trap, right? Anytime we run out of space, it's traps, or it's using that trend line, right, not as support, right, but as resistance, if we can get that, right, if we can get that moving average down below that trend line. All right, guys, don't forget, we're going to execute this strategy and similar strategies to this every morning in our trade room. If you'd like to join the trade room and come execute this strategy with me every morning, don't forget, it's all inclusive as part of our advanced classes here. So as an advanced member, you'll have all access to our trade room, learn all of our strategies, and of course, get all the tools that you need to be successful. You can learn more about our beginner, intermediate, and advanced classes right here on our website at schooloftrade.com. I'll put all the links in the description of the YouTube video. I've got a great free trial with a free pass. Come out and join me as a guest in our trade room. So if you want access to our trade room as a guest, grab that free trial. I'll put all the links again in the description of the YouTube video. And if you have any questions, please don't forget, you can always email, call, or use Skype. I'm always standing by to help you guys answer all your questions, help you get started, and help you further your trading career. So rest up here tonight, early in, early out tomorrow morning. Don't forget tomorrow, keep it simple, right? Keep it simple tomorrow, early in, early out. If you're traveling for the holiday, I wish you the safest of travels. Hopefully you don't end up spending too much time in the airport. It's always a bit tricky traveling on a Wednesday. So definitely travel safe tomorrow. Enjoy your time with family and friends. Take a couple seconds to really let it soak in, and then we'll get back at it when we see each other back after the holiday break. Enjoy your break. This will be the last newsletter of the week. So the next time we'll talk together right on our newsletter be next Monday evening. So you guys travel safe. Be well out there. Be nice to each other, right? Eat as much turkey as you can, and we'll see you guys next time. Adios, amigos. Bye-bye for now.